The first thing I want to kick it off with is this year-end report from ABI Multifamily. The founder of Neighborhood Ventures, co-founder of mine, also is the founder of ABI Multifamily. They're a big apartment broker in Phoenix, sell more apartment buildings than anybody. Every year they come out with their year-end report that talks about the changes in the market for multifamily in Phoenix. And so this report just hit a few weeks ago, and I want to dive into it. The nice thing about this is you can download this report as well. It's free to anybody. This research is expensive research, and they give the data away to everybody. So that's a really cool thing. And I want to point everybody to the bottom left-hand corner of this report, where it basically details what's happened from a year-over-year change with multifamily properties, 10 plus units. Going back 2022 versus 2023. So 2022, there was $14 billion in sales. Last year, $3.7 billion. So it went down 74%.
Slight drop off.
Yeah.
So for a broker who works on commission based on transactions, it was a slow year for ABI and the brokers in the industry. Now this comes off of 2 or 3 really busy years, but big drop off last year in sales volume. There is also big changes when it comes to the price per square footage. That went down a little bit, and there's some outliers as to why that would happen. There's so much less sales transactions that happened last year that some of these numbers look bigger than they actually are. The price per square footage last year ended up being $312 per square foot, down from $370 the prior year. The other 2 things I would point at, they have occupancy rates basically flat, down 0.8% or 80 basis points. Average rent for them was down 4% based on their surveys. So we've read a lot of different data on what rent did last year, and I'm seeing it's basically flat to slightly down by a few percentage points. That's pretty consistent. Now, this also comes off of 3 really strong years of rent growth in 2022, 21, and 20. In those years, average rent growth for each of those 3 years was over 10%. So it was a year that things were flat. And then the last thing that I'll point at is that the number of units that were delivered, according to ABI's research, was basically 17,000 units, and that was up from 12,300 the prior year, so up 37%. So these numbers it's important to look at the data. It's important to see what the data means, and it's also important when you look at data to see if there's any outlying reasons why data could lead you the wrong way. Some of these numbers definitely stand out.
Yeah, I think it's something we talk about all the time in the office, where you have all these new units that were delivered onto the market. Consequently, rent stayed flat. People had the option to choose where they want to live because there's so many units to pick from. And then in the high interest rate environment, transaction volumes being down makes sense. Interest rates are above 7%. Buyers aren't going to be able to buy. Investors aren't going to be able to invest. Now, as we anticipate, the report talks about it, interest rates coming down. It seems like there's plenty of dry capital that's ready to explode in 2024 and 2025, which is exciting for us as a multifamily investment company.